April 2nd, 2025 will forever be remembered as the day American industry was reborn, the day America's destiny was reclaimed, and the day that we began to make America wealthy again.
Global financial markets are in turmoil following U.S. President Donald Trump's recent imposition of sweeping tariffs on imports on nearly 90 countries. This aggressive move has ignited fears of a full-blown trade war, leading to significant market volatility and investor uncertainty. The impact has been profound across major stock indices. The Dow Jones Industrial Average plunged by 3,910 points over 2 days, while the S&P 500 and NASDAQ each fell nearly 6%, collectively erasing $6.6 trillion in market value. Asian markets have not been spared. Japan's Nikkei dropped 7.8%, and Hong Kong's Hang Seng fell 13.2%. In India, too, the benchmark indices Nifty and Sensex plunged over 3%, wiping out a whopping 13 lakh crore rupees of investor wealth. Among the worst-hit sectors is IT. The Nifty IT index plummeted over 5% to a 52-week low, with major IT firms bearing the brunt. In just one day, on April 7th, Infosys slumped by 3.75%, HCL Technologies dropped 3.27%, Tech Mahindra slipped 2.47%, and even TCS fell by 0.69%. As panic gripped investors, the Nifty IT index also nosedived, reflecting deepening concerns over global trade tensions. The sell-off has wiped out massive investor wealth. TCS alone lost 1.34 lakh crore rupees in market value. Infosys followed with a loss of over 73,000 crore rupees, HCL Tech shed 50,067 crore rupees, and Tech Mahindra saw 16,305 crore rupees vanish from its books. Now, this market downturn is driven by several factors, the first being the trade war fears. The U.S. tariffs, coupled with China's retaliatory measures, have heightened concerns about a global trade war, leading to increased market volatility. Next up, the fear of recession. The escalating trade tensions have raised fears of a potential recession. J.P. Morgan has increased the probability of a U.S. recession to 60%, citing the impact of tariffs on economic growth. The Indian IT sector is particularly vulnerable due to its reliance on U.S. markets. The tariffs threaten to disrupt demand and supply chains, potentially leading to reduced discretionary spending by U.S. clients and impacting revenues of Indian IT firms. Economists warn that prolonged tariffs and retaliatory measures could dampen global growth, spark inflation, and create prolonged market volatility. As markets remain unstable, attention is turning to whether trade agreements can be revised to end the economic uncertainty. As the situation unfolds, markets worldwide remain on edge. Investors are closely monitoring developments and potential policy responses to mitigate the escalating trade tensions.